In a rare and exclusive conversation, SRF's top management tells us they are looking at a 15% growth going forward in their consolidated business year after year. And also, I spoke to Mr. Ashish Bharatram, who is the chairman and managing director of the company, along with Kartik Bharatram, who is the joint managing director, on business, strategy, tariff impact, and long-term growth plans, and a lot more actually. Listen into what they had to say.
Yeah, I think there's no doubt about the fact that tariffs have created a lot of uncertainty in the system. This 25% penal tariffs on India, I think, was something that we didn't expect. While President Trump has been he says a lot of things, doesn't do that, and then says something else and does something else. But I think this really hit us badly. And for the last 3 months, there's no doubt that the exports to the U.S. have been impacted. The US is a very important market, not just for SRF, but I think for a lot of companies out of India. So we are hearing that, there is some sort of a deal on the anvil, and, but, we've heard about that in the past as well. But till we finally hear the announcement, obviously, it doesn't mean anything, but we're all hoping that that does come around, because the US is the biggest consumer market in the world. And I believe that we need to find an answer there.
Okay, and that's about the tariff bit. What about what's happening with the chemicals industry before tariffs? You have been changing your tones. It was, okay, there's some issue, then you became cautiously optimistic. There was a time when the understanding was second half of FY25 could get better, but now it's second half of FY26. What's the long-term strategy on chemicals business overall? So
I think it's a bit of a mixed bag. I think we all need to understand, first of all, that when it comes to chemicals, it's not the US. The big daddy in the room is China, right? And China, I think, just post-COVID added so much capacity across various sectors. And, their philosophy has been that even if it means bleeding for 8 years, 10 years, etc., they get the support from the government to deal with those downtimes. But they just want to grab market share everywhere. And, that's basically been what their philosophy has been. So companies like ours, for example, have to find niche areas of being able to compete with them and so on. One of the sectors that we supply to in the specialty chemicals business is the agro sector. The agro sector, unfortunately, has also got very badly hit because of the tariffs and so on, because the US used to sell a lot to China. They've had a lot of soya, etc., that's lying around, nobody's buying. So the agro cycle in the US is just going through a really tough time. So there is chaos in the system, and what we thought would be a recovery in the second half of 26, I still feel that this recovery is going to take longer for it to come back. But on the positive side, we are seeing a lot more traction on the refrigerant gas side, etc., because to some extent the quota regime has come in America, the quota regime has come in China, and that's something that is going to probably play out well for us in times to come.
You have films, which is a big business for you as well. That also went through that uptick during COVID. We had supply disruptions, but now there's oversupply in the market. How do you decide that you have to put capex in an already oversupplied market?
So I would put it differently. Again, yes, you're right that business is more cyclical than our chemicals business, and we have less of a moat over there that's compared to the chemicals business. But I think at the same time, we've got to understand that there are many opportunities. So one of the reasons we changed the name of the business from packaging films to performance films and foils is also because we're moving into a new sector in films, where, for example, we're getting into what's called capacitor grade films. These are used actually in the electronic space as capacitor films. We are in the foil business, for example. While we started off with packaging, our longer-term goal is to get into battery foils. Similarly, we're looking at some new opportunities over there as well to come into new segments. So the idea is to move beyond packaging and get into certain other sectors which are a bit more niche. Obviously, that's something that we have to see how India's electronics sector grows in the next 5 years. But I think the push that the government is making in that area will help. Will help us be able to take advantage of that. And I think, again, where SRF is able to differentiate is that we're very comfortable working with the organized sector. I think we're very comfortable working where there are stringent processes, systems required, and I think those are the customers that we'll be dealing with when we get into this space.
So coming to the electronics manufacturing scheme, SRF is one of the participants, right? So what's the role that SRF will play in that entire scheme? What kind of capex will you be putting there? When does that start?
So it's a two-stage capex. The first capex is actually going to be online in February, and the second will probably be, we'll go to the board sometime middle of next year. As soon as we've got that streamlined, it is a very new technology to what we've done in the past. So we just want to make sure that we get our hands wet, we understand exactly what it's all about, and once we figure that out, we'll go with the second plant. But the total capex there could be in the region of around 500 crores. Over, so around 270 crores are going in now, then we'll put in the next.
Okay. What is the general asset turn on the entire capex that the company has, trying to understand the return possibility?
So we don't look at the asset turn as much. And I'll tell you again, the point that you made earlier that, sometimes turnover could be a little bit of vanity, because a lot depends on what your raw material costs are. So in a business like packaging, if you're in a down cycle of the petrochemical chain, then everything falls. So your revenue falls as well, right? So on the other hand, if everything goes up, then suddenly you find your revenues go up and so on, but your EBITDA margins fall. So if the raw material is lower, you normally end up with higher EBITDA margins, and if raw material is high, you actually end up with lower EBITDA margins. So our focus is generally on ROCE, because I think at the end of the day, what we really focused on is, listen, for the amount of money that we've invested, what is the sort of return that we can generate. And so for the performance films and chemicals, our goal has always been to look at something in the region of 16 to 17% ROCEs, and the chemical sector upwards of 20.
So when you said you have to create value for the 50% remaining owners as well, do you think that would happen by demerging the three segments?
That's a question that keeps coming at me now and then.
It had to come.
Yeah. No, I think it's a tough one, because one major advantage that we get is the fungibility of cash. So, for example, the technical textiles business is much more of a cash cow. And for us, in that sense, if that business was on its own, the question would be what would we do with the cash that it generates? This way around, when you look at it from an SRF's perspective, we're able to use that cash to actually grow the chemical business and the packaging films business. So, it's just a question of what actually makes better sense for the shareholders. But I'm not going to say that it'll never happen. It is possible that down the line, the packaging business might just grow to a level where, if it is actually now, self-sustaining, it doesn't need any support, and then one could look at it differently. When
you said packaging reaches a certain level in terms of revenues, that's when you could think of getting it demerged. What is that revenue level or capacity level?
I think once I'm comfortable that, on a perpetual basis, maybe they can earn more than 1,000, 1,200 crores of EBITDA on a annualized basis. Maybe at that stage, one will be more comfortable looking at it.
Oh, okay, all right. So chemicals will continue to be more than 60% of your overall business?
For sure.
And what kind of growth are you envisaging? I'm not saying short term, but with the kind of investments that you have?
Yeah, our aspiration has always been to grow in the region of 15% per annum. I think, when you grow at 15% per annum, you're obviously, growing at a level which is much faster than where the GDP of India is. Even if you take nominal GDP, you're growing at a much faster pace.
There's a capex announcement almost every quarter from SRF. It's known to be doing that. How do you decide where will the next leg of growth come from? And between the three segments, where do you think will the growth come from for SRF in the next 3 to 5 years?
So, Sonal, I think it's definitely going to be to a large extent from the chemical sector. I think, what we've been able to do in the chemical sector is really create this strong, what we call the chemical technology group, which is our R&D, engineering, and so on, to be a differentiator. Okay, I believe that for a country like India, we are now getting to a stage where the economy closing in on $4 trillion is going to require a lot more chemicals to be produced internally if you really want to keep making the leap. When we spoke about China in the past, I think what allowed China to grow exponentially was the fact that they just had every basic chemical available in their ecosystem, that it could move from here to there, and they could develop newer and newer things.
I just want to add something there, Sonal. China has 40% of the world's chemical market in terms of production. We have 2.5 to 3%. So India is still minuscule in the world thing. So even when you add 1% or 2%, that means a huge amount for India, while it may not amount to a huge amount in the global thing. So therefore, I really do believe that the potential that India has in the chemical thing, and Ashish mentioned, especially those who have the R&D, who have the teams to be able to develop these new products, it is immense. There are hundreds of thousands of chemicals. The number is just huge, right? So many opportunities in many areas in terms of where one can look at growth in the chemical sector.